Thanks, Blake, for joining me today. To kick us off, do you want to just introduce yourself?
Yeah, totally. Thanks for having me. So Blake Faulkner, I'm the CEO and co-founder of Crewmate. We build white labeled embeddable communities for brands. I'm a recent grad from Miami University in Ohio. So just moved from Cincinnati to San Francisco, raised some money while I was in school so I could move out here and build a tech company. And now working full time on that tech company.
Awesome overview. And yeah, brought you on today to talk about your experience raising money as a student founder. I thought maybe we could start off by just giving the audience more context. Can you talk more about just like how much money have you raised, who was it from, and yeah, when you actually raised that money?
Yeah, totally. So I raised the money through like various different means during my senior year and the end of my junior year. So there's a few different ways that I raised money. So my current company, Crewmate, is backed by Dorm Room Fund, which is a student VC firm, Rough Draft Ventures, also a student VC firm, and also Rough Draft Ventures is a subsidiary in a big way of General Catalyst as well. So it's a great way to kind of get connected with different firms. And then also Soma Capital and Stonks.com. And all of these different, investments have some tie to me being a student or different connections that I made through the organizations that I'm a part of, like Sigma Squared, Gen Z VCs, different orgs that I met people that were either intros, referrals, or I did some wacky stuff to get investments, like just adding everybody at a firm on LinkedIn without any note added, which like actually ended up working out. So yeah, those are the funds that I raised from. We raised a little over 200K when I was in college, and then that's really what actually enabled me to graduate and then work on a startup full time, and move my co-founder me both out to San Francisco to work full time. So.
Gotcha. And what did you raise on? Was this like safe investments or yeah, how was it structured?
Yeah, so all safe investments. What was great is that some of the investments were through competitions and some of them, and then on top of the investments, we also got some grants as well. So I won competitions at my school, which is something I feel like every student founder can do. Like a lot of schools have these like pitch competitions that you can like either submit yourself to or do a class for and win like 5 to 10K. I did that when I was in college, then also did like a local government organization that allocated some capital to like small businesses and like fit that category.
Yeah.
So I was able to also take advantage of that while in college.
Can you talk about how like the total amount actually like came together? So like, I guess like what was your process first? Did you do like the pitch competitions, then you went to Rough Draft Ventures, or how did it actually like come together?
Yeah, so it's interesting, a lot of different ways. So on the grants end, that was winning pitch competitions at my university, and then professors and kind of local ecosystem people took notice. So when you win the pitch competition, sometimes there's like a local media coverage. So for Cincinnati, there was Cincy Inno covered whenever we would win like competitions, or when we would do the local accelerator for our school on a yearly basis. So that local coverage ended up actually producing the local grants that we received. And then we won the competitions because like a lot of those competitions are pretty straightforward for your school. Sometimes if you're really serious about your business, those competitions can be a really great way to kind of like outcompete at your university. Because some people kind of just have to do those competitions because they're in a class for it. They're just looking for a grade. But if you're like really serious about being a student founder, you can do those competitions and really excel, get the money that you need like early on. So a lot of that was like just local media winning the competitions. And then like once we started to kind of snowball into some success, we were like, all right, we can actually take this and go a little bit farther out of our like small ecosystem of Cincinnati and move on to like larger competitions. So we did like the Global Student Entrepreneur Awards, won that regionally for an area of the Midwest, got like $1,000 and then a flight to Chicago to compete, went to Chicago and competed in that like national competition for GSEA, and then met someone that was backed by Dorm Room Fund, and then ended up like thinking Dorm Room Fund was really cool. And then I added everybody at Dorm Room Fund on LinkedIn, no note attached at all. And somebody reached out named Tony, who was actually our first, major check into the company. So that was insane. Like I didn't expect to just be able to add a bunch of people and someone reached out. So I was really just like, and I got really lucky on that end. And then with Rough Draft Ventures, that was actually a pitch competition. So we got the check from Dorm Room Fund, and then we saw that Rough Draft Ventures had a pitch competition coming up for the spring. And we won the New York sector for that. So we had a 25K investment at whatever terms we wanted.
Mhm.
So this was also like in the 2021, 2022 days where there was a lot of funding available that was largely at whatever terms you wanted to kind of set for yourself.
Yeah.
Because everyone was so kind of like desperate to get into the hotter deals. And then Soma Fellows, we got into that program after already getting a check from Dorm Room Fund and Rough Draft Ventures, and also from Stonks.com. So Soma Fellows, we had a bunch of referrals, which really, really helped us. So everything kind of just continues to snowball.
Yeah.
And that program was like 100K uncapped, which is great for young founders because you don't have to worry about like studying evaluation. You can kind of step into that program, get mentorship on how to scale your brand, how to fundraise, and then worry about setting the terms at kind of a later date. And also Stonks.com is one of our investors, which is now a company called Sandhill Markets. They used to be a demo day platform, and now they are a secondary like platform that sells shares in emerging companies, which is, I think, a bigger display of where the market's kind of moved from being like everything's hot, we have a demo day platform, to now selling secondaries in companies. But Sandhill, I actually was at a program called Draper University last summer, which I was really kind of like lucky to get into. I learned about it when I was super young. Always wanted to go to Draper, always wanted to kind of do the Silicon Valley thing. Saw a video when I was like 13 about Draper University and how cool it was, based in San Mateo, and ended up getting essentially a full ride scholarship both through my school and for Draper to come out to Draper and pitch, and also live in Silicon Valley for 8 weeks while I was in college. So came out to Draper, spent a few weeks here, learned a ton about entrepreneurship, met a ton of VCs, a ton of folks kind of within the Silicon Valley ecosystem, and then was able to actually like win their internal demo day, beat out like roughly 60 companies from 24 different countries, and got to pitch on Stonks. Pitched on Stonks. We had a 2-minute pitch on Stonks. It got like 600K in prospective investment interest in like 2 minutes, which at the time felt insane. And then Stonks direct invested in us, which was also great. So yeah, that's kind of like the breakdown of our 4 investors: Stonks, Soma, Dorm Room Fund, and Rough Draft Ventures.
Kind of curious about what you see as the differences. So like, what do you see as the differences between those like pitch competitions and those grants and pitching your company that way versus like pitching towards like a student-run VC fund, like Dorm Room Fund? Like, how is that process different?
Yeah, so the difference between like grants and student VCs, it really depends on the student VC that you're pitching. When I was in college, like my team at the time, we thought it would be a really amazing idea to essentially do an entire venture round exclusively with like the student VCs across 10 to 20 different universities. That ended up being really, really hard to do. And we actually only really closed funds from like the top 2 student VCs, which are Dorm Room Fund and Rough Draft Ventures. And also like student VC has a lot of different meanings to it as well. Like a Dorm Room Fund or a Rough Draft Ventures, those are like formal funds that allocate fairly large check sizes. Like Dorm Room Fund is 40K plus, and then Rough Draft Ventures is roughly 100K to like 150K. So those are really, really large checks. They're not, Dorm Room Fund and Rough Draft are not for specific university. They're collections of students from a lot of like top universities that actually get to invest in companies and get mentored how to be VCs. So you're coming in as a student founder, learning how to be a student founder, and those folks are learning how to be VCs while they're evaluating you. So it's a really interesting dynamic. However, there's a ton of student VCs that are just like specific to one university. They might only be able to invest in the alumni of that specific university as well. So I was in a VC firm for 4 years called Red Hawk Ventures on my college campus, Miami University. And we only exclusively invested in the alumni of Miami. And that's how a lot of like student VCs are actually run. So Dorm Room Fund and Rough Draft are actually the outlier in a big way because they're more so focused on like creating massive returns. I think Dorm Room Fund's invested in a few companies that are actually worth over $1 billion now as well. So the student VC model works really, really well when it's put in that context of like professional students that want to end up being professional VCs and professional student founders that want to end up producing real ventures that scale. There are a lot of like student ventures programs that are like classes that a student will take, and then during that class they'll like allocate, maybe $1,000, or the whole class will allocate one single $10,000 check to some random company, an alumni company, or just someone generally in their network, over like a class period. So if you're a student VC, the TLDR is like, make sure you know what VC you're going in front of. If it's a student VC, make sure you understand their investment thesis before you actually like commit time to putting together a deck or meeting with their team. Like, understand what you're walking into, and also understand that like when you're working with colleges in general, and this is less relevant for like a dormer fund or a rough draft, but more relevant for when you're working with student funds on campuses. Sometimes they might not even be interested in actually giving you a check, and sometimes they might just be interested in like effectively tying up your time, which is like, kind of how it goes when you're working with some student funds. Like, sometimes they just want to use your need of fundraising as an educational opportunity for the students. Nothing
Yeah.
bad about that from their end, but for you, the founder, is that really the thing you should be prioritizing? I think that that's like super relevant. And there are like really quality ways to engage with student VCs as well, like outside of just fundraising. Like, we're about to kick off a project with UCLA Ventures that's all about go to market. So it's like, how do we get tapped into as a company? How do we tap into the ecosystem at UCLA and meet the different founders, business leaders there that might be able to use our products? So that's like a great way that you can also kind of like, I'm not an alumni of UCLA, obviously.
Yeah.
So tapping into UCLA's alumni network is super difficult for me. How do I get an in to do that well? Is super relevant. So that's on the student VC end. On the grants end, that's a completely different process for that. I know some people when I was in college that were also student founders at other universities across the US. Some of them had massive success with grants. Like, I know folks that raised like 700 grand through grants when they were in college. A lot of those folks are doing more like hardware, construction, things that qualify for either like larger government grants or like institutional grants. If you're building like B2B software, it's going to be more difficult to get a grant.
Yeah.
For us, we were just lucky that there was a local organization, Main Street Ventures, that wanted to find a way to allocate money to student startups. So they actually ran a pitch competition called Launch It Cincy, that I won when I was in Cincinnati. And it was a really cool program. They essentially allowed us to have the entire summer paid for rent, living expenses, to like live and work in Cincinnati. And then at the end of the program, we got $10,000 to kind of continue the business and scale it up. And all of that was non-dilutive, grant-based funding from like Main Street Ventures, which I believe gets most of its funding from like local government distribution.
Cool. And then I had a couple questions around just like the prep around getting ready to fundraise. I guess like, how did you prepare? What resources did you use? And did you have like a mentor or someone that helped guide you through the process? And how did you pick that mentor?
Yeah, I I think like failure is the best teacher. So like when we started pitching VC funds, with what we were working on at the time being the game developer marketplace, my background was as a game developer, and we had like the metaverse tailwinds behind us as well, which was great. So we were pitching funds that we definitely were not ready to pitch as well. Like, we were pitching to student VCs, but we were also pitching like partners, like partner committees for like really, really big funds. Totally bombed those meetings when I was in college, like for sure. Like, would walk into the meeting and try to get like an uncapped, investment from like a big VC fund, and it was like a mess, right? So learned how to, like, one, how do you like value your company is an important thing. Like, what should you be asking for? How will that investor actually look at the raise that you're bringing them, right? Like, if you bring an investor who's like normal check size is like 500K to 2 million, if you bring them a raise and you only want 100K as a student founder, they're not even probably going to look at that, right? They're going to maybe defer you to some other program that they run or something, right? So like, I'd walking in, understanding what league you want to play in as a student founder is super important. and probably finding a mentor that fits within that kind of bubble is important.
Yeah.
For us, when we were pitching like dorm room fund, it was super easy because with dorm room funds, they only have one check size, or at least when we pitched them, they only had one check size at one specific valuation. So
Mhm.
that's really great if you're a student founder because you don't have to worry about like, you know, negotiating over evaluation or negotiating a check size. For us, it was like, all right, it's 40K at X valuation, and that's just the deal that we give everybody, which was super helpful for our first check because we only had to focus on pitching the idea and pitching our traction that we had at the time. There are companies that get investments from student VCs without a lot of traction, and they just come in with an idea and they go to a good school. For us, I feel like we did probably have to work a little bit harder because we aren't coming from like a target out, like a school that gets a lot of allocation, right? So for us, we were coming in, we're like, all right, we have to have a really crafted pitch. We had a really great pitch deck, in my opinion, at the time as well. And I think that you refine the materials and you refine the pitch deck through those local competitions and those local like conversations with grant orgs before you actually go and you pitch the larger student VC funds. And even like pitching to different tiers of student VC funds as well, right? Like do your local campus pitch competition, right? If you win that, get feedback from that, then go talk to local grant, organizations, right? There's like startup grant orgs in most major cities nowadays. Just shoot them an email and ask about, what their programs are. What are you doing? Get feedback on your pitch through that. And then maybe pitch the local student VC fund that's specifically for your college campus and maybe only invest in alumni. Pitch your professors, get feedback. Share your ideas with like classrooms full of students if you have a professor that'll allow you to speak in front of like, the classes that they have. All of those ways are really great ways to get feedback before you actually go to market and try to raise money from like a dorm room fund or a rough draft ventures because they're a little bit more serious. Like their limited partners are all really well established, angel investors and VC funds, like the people that you really want to have access to over time. So yeah.
Yeah, that was also one of my questions. You kind of touched upon it in this answer. You talked about like being at like a target university. You went to Miami University. I guess like how much does that play into like raising money? It seems like you mentioned you had to do a little bit more work. Does that just mean like you need more progress on your company to like get those meetings? Yeah, how would you frame it?
Yeah, I've met a lot of students that go to those more target schools, right? They're going to Stanford, they're going to Berkeley, they're going to XYZ. And there's an established alumni network, there's an established angel network. That's something my school didn't have, right? So for me, I also got lucky because I didn't fall into some of the traps that a lot of students that are building companies that have a little bit of traction fall into. There's a lot of student founders that will like severely dilute themselves because there's an angel at their school that like invest 100K for 20% of the company. And then like I met a ton of founders that happens to because there's really no education available on like, hey, random student at XYZ non-target school that has zero venture and like an okay entrepreneurial ecosystem of like people that build consultancy practices and like lifestyle businesses. How do you like raise? What's the valuation as a student you should be going for? Like a lot of that information is not particularly available. So just being from one of those schools that don't have, that education infrastructure built, you're immediately like having to sidestep different like pitfalls because if your startup gets in the local news, some angel that's like a lawyer or an attorney or something or like a accountant's going to reach out and want to invest in your company, and it's like, all right, you have to make sure that they understand what they're getting into and that like they didn't just watch Shark Tank twice and then decide to try to invest in your company. And how does that affect your business? And there's all these things that I see people get wrong all the time. There's a lot of like alumni that are doctors that'll put money into companies and they'll buy like 30% of a company that a student's running for like 20K. And when the student does that, they don't realize that they're completely like probably removing the company from the ability to raise venture funding in the future because now they just sold 30% of their company to some random guy who's probably not going to be very engaged. So that's like a real problem that you kind of just have to sidestep. And then also too, like I mentioned, there's no angel network. So you're not really going to have a lot of young people at these like non-target schools. And I'd say non-target, not in like the traditional perspective of like schools that are target for like finance or consulting or whatever, more so schools that are non-target for like venture allocation, right? Like a
Yeah.
lot of VC funds, they'll run programs for some student founders at specific universities, right? Like
Mhm.
Pair Ventures is a good one. They run something called Pair Dorm and Pair Garage, which is like specifically targeting students from like 4 schools, right? Like, so if you don't go to those 4 schools, you need to figure out how to make it work. You need to really like work harder on your PR. You need to make sure that you're still competing at a national level, both in like targeting pitch competitions where there's a larger presence from folks that are working at like more VC funds. Find a way to do programs at your school that give you exposure to VCs. Make sure you don't fall into the pitfalls that like most, I feel like, student founders do. Like selling their company for a ton of money to a random alumni is like a really big thing. Probably saw that 100 times when I was in college.
Mhm.
And then just like making like on the mentorship side, if you can find an alumni or somebody in your network that's like raised some money, has a tech company, they could be a good resource for you. But I'd also be cautious because a lot of times people will give advice on their exact circumstances. Um, and that's not always relevant to you as a student, right? Like if you're talking to some entrepreneur that built, you know, a big, let's say like microwave company, which is actually like an example that I ran into. That person that built a big microwave company in the 80s probably doesn't have like the most know-how on like fundraising in 2023 from
Yeah.
like random programs that you want to do. They're not going to probably understand the fundraising agreements either. So if you're going to them for help on understanding the safe or stuff like that, or like how to get a specific valuation, you run into that problem as well. Also, like local angel networks for, you know, different cities are going to differ in quality, which is something I ran into as well as a student founder. Um, like the angel network where I was from versus the angel network in Silicon Valley is going to have very different approaches to how they like educate their ecosystem. So
Mhm.
you also want to make sure that if you're a student founder that, in my opinion, I think that you should really one work to find a way to get to like a New York City or a San Francisco, just so you can be in a place where you're educating yourself, seeing what, you know, the top of the market terms are for startups, seeing what accelerators exist, and not also getting overly absorbed into that local ecosystem and overly dependent on the education that that ecosystem provides, because like 9 times out of 10, that's going to be a very biased ecosystem for you. So like getting out, seeing different programs, seeing the top of the market terms, meeting new mentors in other cities that might have a little bit more experience and might be a year or two ahead of you and not like 30 years ahead of you, is also super relevant. So yeah.
Cool. And then want to talk a little bit about just like the tactics for raising money, like what worked for you, what didn't. You mentioned a couple of them already. You mentioned the LinkedIn thing that you did with Dorm Room.
Yeah.
You mentioned pitch competitions and grants sort of snowballing into those student-led VC firms. And again, for the audience, like this is what worked for you. It might not work for everyone, but yeah, any other tactics that you can share that like worked well or didn't work well.
Yeah. I think I mean, I did not believe that by adding like 50 people at Dorm Room Fund on LinkedIn with like, and I did that with no note attached too, right? When you add someone on LinkedIn, you can add the like little note for context. I just added everybody, like just straight up added them, and I got lucky and somebody reached out. It's probably like maybe that will work for like the average student that like is, and I think that worked also because I was really tactical about our PR. So when I added everyone to Dorm Room Fund, I had everything about what I was doing already on my profile on LinkedIn, right? Some people are very reserved, especially student founders, to talk publicly about what they're doing. You have some student founders that want to be like in stealth mode about what they're working on. I don't think that that's very helpful. When you're a student, you need as much help as much help as people are willing to offer you, and like not telling the world what you're working on is a really great way to not get any help from anybody, and also to not get any recognition for any like accomplishments that you've produced or anything cool that you're doing. So I think the dormant fund thing worked out, one, because I had the audacity to just like add 50 people at the fund on LinkedIn, but two, I was really public about what I was doing. So when that person, Tony, that, you know, brought us to dormant funds, when he saw my, you know, LinkedIn request, he actually looked at my entire account and he saw, oh, hey, this guy's doing a ton of posts on game development. This guy's doing a ton of posts on the company that I was working on at the time. So I think that also kind of helped move me from, hey, this is a random person that's adding me on LinkedIn into, oh, okay, this person should be in our pipeline and is doing something interesting. So I think that that's a combination of both, like, one, the audacity to just reach out to people because it's, you know, people think that things are going to come to them. Nothing comes to you. Like, add people, go out there, work for it. But then also too, like, being public about what I was working on allowed them to take the next step and not just have me in their LinkedIn connections. Obviously that's dormant fund specific, but, and then on the pitch competitions for both like GSEA, local pitch competitions, the Rough Draft Ventures spring competition, all those competitions I knew about because I spent like an unhealthy amount of time online following all these VC funds, following all these like different entrepreneurs who would repost content about these pitch competitions so that I was always in the know about, all right, there's a competition coming up in the spring for this program. Oh man, I missed this competition, but at least I know now that it's going to be next fall, right? So creating some type of a tapping into that larger network of entrepreneurs and especially like student funds, student networks of entrepreneurs will allow you to be aware of like what competitions are going on, who's winning what. If someone in your network that's a student and they're a founder, if they win a competition and you see their post on LinkedIn about them winning it, don't take that as like, oh, that, you know, that guy's just like bragging, right? Take that as, oh, there's a new competition that I, as a student founder, can like now know about, right? And can prepare for and can look at for next year or whatever, right? So start building up like an understanding of what programs exist in the ecosystem that you can participate in and take advantage of.
Cool. And then kind of curious for the student-led VC firms, I guess, like what did you see as their value add when you were trying to raise money from them? Like what was their perceived value add? And then like how have they helped you to date?
Yeah. So student VC firms differ in quality. Like I mentioned, there's like the Dormer Fund and Rough Draft Ventures, in my opinion, and I think like also in the larger ecosystem, those are taken as very serious VC funds, right? Because Rough Draft is largely just General Catalyst's student investment arm, and then on Dormer Fund's end, Dormer Fund used to be first round capital exclusively, and then now they're an independent fund.
Yeah.
The value of a dorm room fund or of a Rough Draft Ventures is that those are real VC funds with real VCs involved either as like mentors or limited partners of that fund. So like really quick, if anyone's not familiar with how that functions, like there's limited partners to the general partner being dorm room fund, the limited partners being the people that give the VC the money that they invest in founders like me. So what was really great about dorm room funds and Rough Draft Ventures is like Rough Draft Ventures, their LP is General Catalyst, which is like a multi-billion-dollar multi-stage VC fund that invests anywhere from pre-seed all the way up to like IPO. So now, because I get an investment from Rough Draft Ventures, I now have access to folks at General Catalyst that I might have otherwise not had as a student founder. And then on the Dormer Fund end, Dormer Fund, I believe, has hundreds of LPs, including essentially like every major seed and pre-seed stage fund, and also angels like Mark Andreessen and a bunch of other really cool people. So you effectively have a way now to maybe meet those people, maybe get an intro to those people because Dormer Fund or Rough Draft Ventures invests in your company. So that's the value, is the connections are insane. Plus two, they constantly run education programs. They run, I think Rough Draft Ventures ran Rough Draft Ventures University or Rough Draft University, which allowed student founders to go stay in New York for a summer and like work on their business with mentorship, right? So once you're in these portfolios, you get access to all these different educational resources that aren't available to the typical student founder. So that's super relevant for the top, 1% of student VC funds, which is Dormer Fund and Rough Draft Ventures. Those are also the oldest student VCs, so I think that that's relevant as well. Like Dormer Fund, I think, has been around for over a decade at this point. So they also have a good understanding of like what you need as a student founder. There's also a lot of, like I mentioned, student VC funds that are campus specific. The benefit from those is going to be different. Dorm Room Fund and Rough Draft Ventures, because they're investing in your company with the intent that you scale that company up over time and that you take on more funding over time, their terms are going to be very in line with like Silicon Valley terms that are given to startups, right?
Mhm.
Some student VC funds that are campus specific, you're going to have a lot of students that are the investors that probably don't understand anything about venture. So that's going to be something that you have to navigate as a student founder, because maybe you pitch Dorm Room Fund, say they invest 40,000 for, 1% of your company, but then you go and you pitch your local student fund and they want to invest 10K for like 10% of your company, right? So there's like this different dynamic that exists as well, just more pitfalls you kind of have to watch out for and be aware of. But when you're pitching those like student funds that are local, the true benefit for those is going to be having a longer term relationship with your university and being able to go to the alumni of that university and have some type of credibility when you do so, right? Because like, say for my university, which is or the university I just graduated from, Miami University, if you get an investment from Red Hawk Ventures, which is that student campus VC fund, then you can probably go to the alumni of Miami and be like, hey, we're backed by Miami. We have this stamp of approval on us. We're selling B2B SaaS. Go to the successful alumni of your university now. You have that Miami University, credential being a graduate, but you also have that stamp of approval from the VC fund on campus that you're an up and coming company from that university. It makes it way easier, I think, to sell into the alumni networks of that specific university and even of that ecosystem as well, right? Because then you can probably also get connections and intros to folks in the larger Cincinnati and like Dayton areas for entrepreneurship as well. So getting connected to business leaders, founders there that you can sell your product or service to is valuable. So for Dorm Room Fund, Rough Draft Ventures, the top 1%, it's getting connected to all these amazing VCs and educational resources. If you don't have access to those funds and you're just looking at getting an investment from like a local student firm, it's on your campus, the benefit's going to be the alumni network and access to that local ecosystem.
Cool. And then last question, I guess just like parting advice. You shared a lot of advice here. I guess like what's the most important thing to know, or like your takeaway, I guess, for students that are watching this video on, I guess, like how to raise money for their startup?
Yeah, educate yourself. Like, don't think that you're just going to be able to walk into a VC fund and raise a ton of money. It's not how it's going to work. Educate yourself on what pitch competitions exist, what VC firms exist that invest exclusively in students, because those are the ones you're going to stand the best chance at to get a check from. Understand what terms are market and what terms are not market. There's a lot of great resources for that. I would highly recommend doing like YC Startup School. It's like a free online program that you can do, learn about like building a company, launching a product, designing, your product, etc., building something that customers want. And then understanding more so on the VC end, I highly recommend if your school offers a VCIC program, do VCIC. It's the venture investment competition. It's like the national competition for competing and learning more about like venture capital. It's a really cool program. Essentially, you have the opportunity to like role play essentially as a VC for a semester, and you get to compete against a bunch of other schools, and you work with real entrepreneurs, and you get to like try to invest fake money into their companies, and you compete with different schools to offer different checks and different terms to the entrepreneur. And it's a great experience. I did it when I was in college. I was lucky that my school had one of those programs. I think roughly like 50 or 60 schools in the US have them, both for MBA and for undergrad. I learned a ton about venture, a ton about terms doing that program, which made me a better founder when I actually went to raise money, because I understood what was market and I didn't fall into some of the pitfalls that a lot of student founders already run into. So just educate yourself on the terms, look for programs you can get a part of, both on campus and off campus, and educate yourself on what pitch competitions are happening, what VCs are investing in students, what your larger ecosystem is doing to support small businesses, and also like up and coming startups. So
cool. Thanks for joining me today, Blake.
Yeah, totally.